I am John Kaiser in Vancouver at the Metals Investor Forum on Saturday, January the 20th, 2018. I am here with Jonathan Goodman, CEO of Toachi Mining. Jonathan, welcome to Vancouver.
Thank you, John.
Jonathan, when I talked to you about 7-8 months ago and you introduced me to Toachi, you said you'd spent a dozen years or so with Dundee Precious Metals, learning everything about the mining industry, what can go right, what can go wrong. You have started a private equity firm called Metaform, and Toachi was the sort of first company that you are going to try and build into a multi-project powerhouse. But a week or so ago, it was announced that you are becoming chairman of Dundee Corp, which is the parent company of the business your father, Ned Goodman, built. How will this affect your ability to grow Toachi into a multi-project producer?
One, I think it's going to help us, first of all, because as an investor, I mean, we're now going to use Dundee as a platform to build this. The thesis that we've ran on since for pretty much the last 3.5 years is that what's happened in the markets is you've seen what I call an orphaning of the junior end of the market. It used to be that the junior end was financed through a lot of the mutual fund players, a lot of other retail investors, and what's happened is the big banks in Canada don't want their brokers investing in the junior mining sector. So their money's all going into ETFs. And we're seeing that not here, but also across the United States, to the point that so much money went into the junior mining ETF that they redefined junior mining companies and threw a lot of the junior companies out of the ETF because they were too small to be junior. Then we've seen blockchain and Bitcoin, and we've seen the cannabis stocks. And what's happened is in Canada, the bottom 1,100 mining companies on the TSX and TSXV have an average market cap of about $10 million. Embedded in those companies are some really, really good assets. And our view is we're going to pair up some of these good assets with some good management teams that can do the geology and the engineering correctly and work towards de-risking some of these. And that's similar to what we've been doing with Toachi. We see it as a de-risking exercise. We had a very interesting deposit. We've gone out and we've drilled it, and now we know we have 1.9 million tons of about a little over 13 grams of gold equivalent, which consists of gold, I think about a little over 4 grams gold, 3.3% copper, 4.5% zinc, 0.5% lead, and about 49 grams of silver. From there, we're now working on the PEA, kind of looking at how are you going to mine this thing. We're doing all the detailed metallurgical test work. So that de-risking process is very important. And in theory, that the more you de-risk it, the more the project's actually worth. And in practice, it doesn't always work that way, and that creates opportunities for people. So I think with Dundee, we're going to be able to fund this plan a lot more aggressively. And that goes for Toachi and then other vehicles in which we create through the platform.
Now, with regard to La Plata, when you started on this journey, you obviously will have a huge pipeline of projects to look on, and you settled on La Plata as the first one. Now, I'm familiar with this project because one of my past recommendations, Cornerstone, had it at one point, and I researched the history, and this project was owned even by an older bottom fish from the 90s. So this project has been around for quite some time. What did you and your team see in it that said, you know, this thing is not this recycle type of thing that juniors use over and over again to generate some fancy drill results and then move on to something else? What was it that you saw that all the previous operators had overlooked with the La Plata VMS project?
Well, here's the first thing. The 90s company time was Cambior, which is a company that I knew very well. Louis Gignac's an old friend of mine, and I sat on their board. But you really need to recognize, Cambior saw what I saw. But Cambior left the La Plata project. Remember in 1999, Cambior had a big problem with their hedge book?
Yes.
And they had to work, they survived, but they had a very that's when they exited La Plata. It was an exploration property, and they just couldn't afford exploration at the time. Cornerstone, the same thing. Remember, Ecuador put in some tough laws and became a tough place to do business. And that's when Cornerstone exited. So you need to understand, I don't think we see anything different than Cornerstone, but what we really saw and really liked was really good grades combined with really good widths. And then even within that 2 million tons, the South Zone, which is 800,000 tons, is significantly higher grade than the North Zone. So we see a place where you can get in there early, start your mining, and get much higher grades, which means you're going to get a much faster payback of capital. It's going to give you a higher IRR. It's going to give you much better economics. And I think the other guys could probably see that. We see it better than they could because we've done a lot more drilling since then, and we've also had the benefit of all of their work. But I don't think anyone couldn't see it. But the bottom line is we were in the right place at the right time as Ecuador turned. Well,
you have increased the resource, and it's looking good. You're working on a PEA that's going to come out. Ecuador, of course, has had a bad rap since in 2008 they embarked on resource nationalism. There was a huge country play when Fruta del Norte was found. How happy are you with the new tax regime that came in a couple of years ago?
Well, it's not really the new tax regime. It's the way that they're interpreting the tax regime. Ecuador has been working with Wood Mackenzie. I think what really happened is when the oil price fell, the Ecuadorian government looked and they came to a conclusion that they need a mining industry. And after what happened with Kinross, the whole mining industry exited Ecuador. And so Ecuador, one, they created a Ministry of Mines. The Minister Javier Cordoba is really the first Minister of Mines that Ecuador's ever had. It used to fall under the petroleum. And now they're an OPEC petroleum producer, so you can imagine how important mining was to the oil and gas minister. So they created a ministry, they built a building for him, they gave him the resources to set up the ministry properly. They've streamlined some other ministries so the permitting process makes more sense. And working with Wood Mackenzie, they're able to sit down with companies and they've determined we want a mining industry. And so they're changing bits and pieces within the code to make it better, and they're really working hard with companies and to help us and help all the companies get our projects to where they can make sense. So, there's not a lot of countries in the world that do that. And if you look at taxes, the highest tax mining jurisdiction in the world is Canada, but it's a fair tax system because our high taxes don't kick in until after we've got our capital back. So they allow repatriation of capital. That's the type of stuff that you're seeing more and more of in Ecuador, is how do they take the tax regime that they have and kind of rejig it so it can be more fair to allow companies to make a return, because they realize if we're not going to make a return, we're not going to make an investment.
Now, I understand 1,000 tons per day underground is sort of one of the levels of the tax regime where windfall profits never kick in, and presumably your PEA is going to be somewhere between 500 and 1,000 tons per day. Based on the nature of this deposit, do you see yourself as just limiting it to this because of the windfall tax problem, or is this kind of an optimal operating rate for this type of deposit and the difficulty in adding additional tons through exploration?
I think it's a good place to start. I mean, the reality, and this is one of the things that I've done a bunch of work. Now, one of our board members is Yves Cherkas, who used to be the president of Agnico Eagle. And when I first met Yves was years ago when I went and visited the LaRonde mine. And I went with him and Paul Penna, who was the founder of Agnico. And the mine was such a well-run mine. But look back at the history, and people, you talk about the Damagami mine. And the Damagami was a mine that was built, and it was built with a resource of about 800,000 ounces. Mostly, it was copper and gold, but mostly gold. And the important thing of that, of 800,000, that's what we have now. And they built it, since they built it, they've expanded it 4 times. And it was also a VMS project. It was lower grade with more tons than we had, but it was similar. They've expanded it 4 times. They changed the name of that mine to the LaRonde mine, and since it was initially built, even though they started they've mined something like 5 million ounces, and they still have 3 million ounces in the resources. With VMS deposits, you talk about lenses, and as you go down, the potential for finding more happens as you move sideways, and we've got a tremendous exploration land package that has a lot of smoke in different parts of the property and project. So it doesn't mean you're going to be a 500 ton per day, but it's not a bad place to start. As a matter of fact, it might even be better to start at 300 tons a day and then move to 5, and then as you take that cash flow and recycle it, then look to expand. That's also a form of de-risking, which you don't see as much anymore, because so many companies, they want to find that big project and sell it to a majors. The nice thing about our team is we have a fair bit of operating history, both on the board and in the people we're working with. We're not afraid to build a mine, especially if it's a small mine. It won't cost a lot of money, and it's something you can manage. And with the grades we have, we can actually get our capital back quickly and use a bunch of that to explore. So there's an optionality to how we move forward that a lot of other companies don't have.
Toachi has an impressive institutional shareholder base. Your last financing was at 40 cents with no warrants. I was delighted that you accepted the invitation to the Metals Investor Forum, but this is a retail, high net worth investor type of a show audience. Why are you here at the Metals Investor Forum?
Why am I here? A question I ask all the time. I got a funny story to tell you later, but the truth of it is as I've said, the industry has changed a lot. The institutions that used to be the core funders of our industry are now running funds that are in net redemptions, and they have a lot of pressure on them to move the liquidity up in their funds, and they can't fund the juniors as much as they could, and that's part of what's making so many of these companies orphans. And we've come to the conclusion that if you're going to be in this industry, and we are very committed to this industry, you have to make a commitment to going out and reaching out to the retail market. And what I think we bring to the table is we bring a very, very solid technical team of people and a commitment to the science, which I don't see a lot of. As an industry, we've made a lot of mistakes. So our personal view is, how do you correct those mistakes? You really stay on top of your science and make sure you do your science right, because stuff still goes wrong in mining. So let's take the stuff that we have some control of and make sure that that's not what goes wrong.
Great. I've been talking with Jonathan Goodman, CEO of Toachi Mining in Vancouver at the Metals Investor Forum. Thank you, Jonathan.
Thank you, John.